Miles here with a brand new show with my new friend Bryan Jacoutot. Do I have that correct?
That is absolutely perfect.
Great, wonderful. And Bryan here is a lawyer, litigator, and today we're going to be talking about Bitcoin as well as XRP. We're going to be talking about the recent legal releasings, filings from the SEC and XRP and Ripple's suing of the SEC. We're going to talk about the implications for XRP. We're going to talk about the implications on other digital assets, other cryptos, as well as Bitcoin. If this is good for Bitcoin, good for XRP, bad for each of those assets or other assets, and then what the value of those assets could be in the future, given this regulatory clarity that we see here. And since I am not a lawyer or a legal expert, and Bryan here is, you are much more qualified to help us understand the legal jargon of what's going on here. So we're going to avoid that jargon and more focus on the implications of what this means for these assets and what people should know as they consider investing, speculating, or trading these kinds of assets. Something else I want to say too before we get going here, Bryan, is that obviously now this is financial advice. We're dealing with multiple assets here. People can make their own decisions. XRP is of Ripple, a centralized company, and so obviously any opinions stated about that company are just our opinions, whether they're positive or negative. So without a further ado, let's get into some of the context here, if you don't mind, Bryan, just in case some people are not aware of what we're looking at here. This is a thread you wrote recently, last week, I think. Got over 1/3 views. You talked an analysis of the ruling of XRP and what you think they might have gotten wrong and why you think there'll be appeals. This right here, hopefully you can see this article here. The SEC ruled that XRP is not a security, and so there are lots of questions of what this means for XRP and other digital assets. And because of this ruling, XRP had a massive price spike last week. You can see clearly here, year to date, XRP trading far lower than it is currently right now, and there's lots of speculation that it may go up further. Other speculation may come down, and XRP has skyrocketed on the total cryptocurrency asset list. It's now the fourth largest cryptocurrency. Only Bitcoin, Ethereum, and Tether, those three giants, are ahead of XRP. So there's a lot of controversy, a lot of discussion going on. Without further ado, Bryan, tell us your thoughts on this. What has happened, and what does this mean?
Yeah, yeah. It was a big ruling. I think the sort of market and the social media landscape reacted, relatively kind of in line with the import of the ruling. At least sitting in isolation. You read that ruling. Bear in mind, it's just one federal district judge in the Southern District of New York. So it has the force of, I guess, law. It's not the law of the land just yet. That's just one judge's opinion. And I think what you'll find too is there's a lot of different opinions on this. So one of the things that I did in that thread was I saw the ruling came down. I read the case, which was actually, I thought the opinion was relatively short given the sort of information that was trying to be just like dissected by the judge. So I was able to read through it pretty quickly and just launch that thread out. But I think the big thing is that I saw when reading that case was all like the arguments that were sort of leveled by the counsel for Ripple in that case were pretty roundly rejected by the judge. You'll see if you read the opinion, the judge talks about something called an essential ingredients test under Howie. And this was something that the Ripple counsel was one of the more clever arguments, and they essentially tried to add some requirements under Howie that didn't exist previously. And they really looked back to the pre-Howie era, because Howie was a case from 1946. So they looked kind of before that. Oh, sorry, go ahead.
No, I just want to make sure that for the people watching about, beware of Howie. If you could define the Howie test for us, and for those that aren't aware, XRP is the token in question, and when we refer to Ripple, that is the company that has issued the XRP. That's the company that has made the XRP. So when you hear XRP, you think the token. When you hear Ripple, think the company. But if you could, for the newbies, if you could give them an explanation of what the Howie test is and the main points there, and why that's been a major debate upcoming to this ruling.
Mm-hmm. Sure. So the SEC is a creature of statute. It's a federal agency created by Congress. I believe it was in 1933, 1934, post-Depression era. And it was a response. It was a reaction by the political landscape from the Depression. And essentially it was to try and avoid having another massive stock market collapse like we saw back then. So the SEC, being a creature of statute, only has authority over what Congress gives it authority over. And so it only has authority over what are called securities markets, or securities market participants. And there's a lot of the enabling legislation from Congress lists a number of things that are quote unquote securities, but it also lists sort of a more general proposition that a security is also an investment contract. An investment contract isn't really defined in the Securities Act, so the courts were challenged under the Howie case to define it, and that was the 1946 SEC versus W.J. Howie Company case. That case, the Supreme Court said that an investment contract is a contract, transaction, or scheme whereby a person does four prongs: invests his money in a common enterprise, and is led to expect profits from that enterprise, primarily from the efforts of a third party. Well, there's also some language that says solely from the efforts of third party, but other language says primarily. So that's a kind of a separate question, but it's a 4-part test. And that's what Howie decided was the Howie case. Sort of the import of that case is that the Supreme Court interpreted the term investment contract in the SEC Act to cover that sort of thing, any investment contract that, or scheme or transaction that satisfies those 4 prongs.
Great. Okay. Yeah, and so the debate then is XRP a commodity, or is it a security, or is it a security or not a security? It is, if commodity is the only option. So it's like gold or oil would be commodities, but Apple stock would be a security, or any initial public offering, or any offering of any token that passes the Howie test becomes a security then. And so the debate is this token XRP, which Ripple created, is it considered a commodity, or is it considered security? And of course, the XRP token fans want to believe it's a commodity, or at least the vast majority of them. And it seems to be that's what the SEC has ruled. However, it seems that it's only certain situations, like they said it was a commodity for retail, but a security for institutions. So what did they really say? Is it a commodity universally, or not really? Or if you could clarify that.
And to be clear, the SEC has not ruled that it's not a security. This one court has ruled that it's not a security in a very individualized particular circumstance. So the SEC sued Ripple in court, basically saying, Ripple, you did not abide by by the requirements of the SEC Act, or excuse me, the Securities Act, and because of that, you didn't register, you didn't pay, you didn't report properly, and the retail investors out there are going to be hurt by this, because we require in this country certain level of disclosure, certain reporting requirements for people who want to offer stock. And again, that sort of stems from the Great Depression era problems that we had. So the court said, essentially, they agreed with the SEC that it was a security in the context of the sales that Ripple made early on with institutional investors, where they said, institutional investor X, with a ton of $100 million or something, come and invest in Ripple through XRP, buy XRP, because Ripple is going to make this great blockchain that has all this utility and has all these users that the value of XRP is going to go up, and you're going to be very happy, and you're going to help us bootstrap this sort of network. It sounds a lot like the ICO craze. But they were the first ones to do it, Ripple. This was back in 2012, so it was very, very new ground that they were breaking. So they did a partial sort of investment with the institutional investors. The court ruled that was a securities offering, an unregistered securities offering. And so that amounted to about $757 billion, or million dollars, excuse me, $757 million in investment capital that Ripple received. So with that being characterized as a unregistered securities offering, presumably Ripple's going to have to give all that back, probably pay some fines, and promise not to do it again, essentially, is what usually happens. But then they also looked at the what the court called programmatic sales, which is essentially where Ripple sold kind of blindly to retail. And they did it through just sort of a centralized exchange like Coinbase, or Kraken and things like that. So the court was looking at that, and essentially it was the very same type of sale, but it was done with when the person was buying it, they couldn't know whether they were buying it from directly from Ripple or perhaps maybe from some third party or another user who had it. And so the court reasoned that that act of simply not knowing who you were purchasing the Ripple, or excuse me, the XRP from, meant that it was outside of the Howie test. It ruled that as far as prongs 3 and 4, it said it couldn't satisfy that because the person who was buying it wouldn't have had an objective expectation of profit to fund Ripple, the company, and essentially get that Ripple company sort of doing things that might increase the value of XRP. So that was the distinction the court made, and that's kind of what I took issue with in my thread, because that's not really a meaningful question in terms of the Howie test. At least I understand it as I read it. The Howie test, again, is that money that you're investing, is it going toward a common enterprise? And since XRP was selling, or excuse me, since Ripple, see, I keep conflating these two, by the way, Ripple and XRP. It's very difficult to kind of keep track of it. But so the question is the person that buying that XRP, is it going to a common enterprise? As a matter of fact, is it? And is that common enterprise sort of the one who is doing the effort that's going to increase the value of the investment of money in the XRP? And I think the answer to that is the same exact answer as the institutional investors. There's no real reason to add in this whole, what the court called the blind bid ask process, where the person was purchasing it, didn't know who they were purchasing from, because at the end of the day, it went to a common enterprise, and the buyer was going to objectively have that expectation of profits based on the efforts of that common enterprise, of another third party. Very rarely are people purchasing it to use it consumptively. And even so, even if it has some sort of ancillary consumptive use case, if the primary reason behind it is an expectation of profits for secondary resale, then I think you've satisfied the Howie test. And for the court to kind of impose this new requirement about, oh, you have to know that you're buying it directly from an organization, a common enterprise, I haven't seen that before. And including in the other cases that have analyzed digital assets, the Telegram case, the Kick case, and the Library Coin case, those don't recognize that as a feature either. So we're definitely in uncharted territory with this ruling, but that's where the judge drew the line, and that's the distinction that she made, and that's what's ultimately, when the SEC, and if the SEC appeals, which I assume they will, because again, this is a very appealable case, I think, when they do appeal, that's what's going up to the appellate court, and that's not a great legal rationale to present, I think, to the Second Circuit. I think the Second Circuit is going to look at this and say, well, where under the Howie test is this blind bid ask distinction that you've made? And I think the lawyers for Ripple are going to have a hard time pointing out to the judge exactly where that is, because I don't think it exists in the first place.
Okay, so essentially, in layman's terms, when someone buys Apple stock, they're taking money and they're giving it to a centralized company, Apple in this instance. Apple takes the money, they build the common enterprise, the business, they sell the phones, they sell the computers, they do all that work, and people then resell that stock for the expectation of profit as a function of the actions of Apple, the company. And so what you're saying is that it seems that this convoluted programmatic sale essentially is on shaking ground, because at the end of the day, it's still Ripple, the company, that has created these tokens. And even though they're distributed, as you said, carving new ground, even though they're distributed in a different way as an initial public offering, stock and everything of that sort, that it's essentially the same thing, because people are buying the token expecting the value to go up as a function of the efforts and the decisions of the company, right?
Yeah.
Okay. Yep. And so the people that would say, more like you, that think there's going to be an appeal, would argue that it's on shaky ground. But there are also lots of people that would say that's what she said. That's what was said. So why do you think they made that argument and declared it as a commodity when in that specific circumstance when even by their own admission is security elsewhere and you think it's on shaky ground? Why would they even attempt to not define it as a security when you think it's shaky ground?
Well, I think the interesting thing here is I don't believe Ripple's attorneys made that argument. It was sort of raised by the judge, what we call in the legal profession, using our fancy Latin words, we call it sua sponte, raised by the judge's own accord. Because when I was reading the briefs for the parties, I don't recall this blind bid ask theory. It might have been mentioned, but it was certainly not, a theory that they were going to hinge their bets on. Their theories were, oh, well, this is, again, it goes back to the essential ingredients test. Like, oh, they have to have all these special aspects of a contract, between the promoter and basically that contract gives certain rights to the investor. You need that in order to qualify under Howie. Or the other option was their utility argument, which kind of gained a lot of traction. I would say probably since Ethereum did their launch, the utility argument, oh, this is gas, for the network. You need to use this to use the network. Therefore, it's not a security, it's a utility token. A lot of ICOs in 2017 tried to go with that, 2018. The court rejected those arguments. They roundly rejected, the judge roundly rejected the essential ingredients test, which was, again, the clever one, I thought, but it roundly rejected that one. Also, really didn't give much weight to the utility argument. So, the fact that Ripple won on this blind bid ask theory is a very tough place to be from an appellate perspective, because, I think that their better arguments, legally speaking, they've already lost on those. So now they're kind of stuck with this difficult theory of, not knowing who purchased it renders it no longer a security. Or who they purchased it from renders it no longer security. That's a difficult theory, I think, to go to the Second Circuit in. And I think that they're going to also, the Ripple might have to appeal this order on the basis of, the judge misconstrued the essential ingredients test or misconstrued the utility argument, because I wouldn't want to go to the Second Circuit with just this legal theory, because it's untested. It is obviously conflicting with law from the same circuit, from the same district court. There's the Telegram case, had an opportunity to maybe, or the Kik case had an opportunity to say, oh, there's a blind, like, it doesn't matter, these aren't securities because the grams we're going to offer them to retail sort of just blindly, and they're not going to know it's from us. Or the library token, same thing, we're offering it to retail blindly. But the courts never approved that. So you have some courts saying that this is not an issue, right? If there's an offering from a common enterprise and you're expecting profits derived from that common enterprise, and that's it, and end of the ballgame. This court made Judge Torres in the Ripple case made a little carve out, but it is it's on shaky legal ground because there's not a lot of precedent to support it. And I guarantee you the Second Circuit will be most concerned with and asking the Ripple lawyers, hey, where's the precedent for this? Where have we seen this before? And I don't know if there's a really great answer for them to give the Second Circuit. So that's why I think it's on shaky legal ground, because their better, maybe more precedential arguments were rejected. So the mechanics of this appeal are going to be very interesting, because the SEC, I think, has really good grounds to appeal the blind bid ask. And even though Ripple technically won a good chunk of this case at the district court, they may need to appeal, because I feel like they'll probably lose the blind bid ask case in the Second Circuit. So you don't want to be stuck on appeal with just that legal rationale, because you've really boxed yourself in at that point.
Yeah, so it sounds like, it obviously was a win for Ripple, the company. It was a victory for them. But you're saying that you think that it's not the win that they were hoping for. It's not the win that would be ideal, because you think they have much stronger legal arguments, and those arguments did not survive. And so the remaining arguments that are in favor of Ripple are shaky ground, and they're probably not going to survive as it goes higher up in the courts. What do you think?
And I do want to clarify, they do have, I think the other arguments that were rejected may be stronger than what actually won the day.
Yes.
But I still think those are not great arguments either. I mean, I think if classic Howie test, I think, is satisfied with Ripple. I mean, you had Ripple launch with Ripple launch $100 billion XRP, on launch day, right? They kept 20 billion of those for the founders. They paid some employees and gave some grants, as compensation. And then the organization itself kept 50 to 80 billion XRP at any given time. That's the whole pot. And so if the judge is saying, you can do that and, basically mimic an IPO without having to do all of the things that, the Apples of the world and the Coinbases of the world had to do, then what's the point of we never have to abide by IPO rules again, because this is very clearly a pseudo IPO. I mean, even like when the ICOs came out, they didn't even try to like differentiate from an IPO. They just called it initial coin offering, and it's the same thing. It's just unregistered. And so if this doesn't amount to a unregistered securities offering, I'm not 100% sure what in this space could amount to an unregistered securities offering. And maybe that'll be the case, and maybe that's what ends up happening. So then we're back in the Wild West, and there's going to be, a ton of fraud and a ton of market manipulation, things like that. Free market folks will say, hey, that'll sort itself out, and then maybe it will. I'd like to think it would, but playing with the rules that we're given right now, it seems like Ripple did what I would call, just a traditional IPO, and the judge didn't really find that too problematic, which is interesting.
Interesting. Yeah, and if they were to win that, basically you're saying that we'd have to rethink everything, because it would basically go against the grain of decades worth of Howie tests, typical regulations, that basically for them to win would be to bet, to think that they're going to win on those better arguments, which it seems like that's not the most probable case anymore, but to assume they're going to win that would be to assume that basically we undo all of these regulations from the past. And I don't particularly know for what reason. I don't know what the incentive would be. Perhaps you can think of one, but I don't know why they would want to circumnavigate that.
Yeah, and then too, like, so that going back to your Apple stock analogy, now the Apple stock might be a security for other reasons other than being a quote unquote investment contract. But, it's interesting to think that Apple stock is obviously only initially sold by Apple to the public, and then it just circulates on the secondary market. It would be weird to think that those secondary market circulations would somehow not be a security, but the initial sale would be. And again, there's probably a more maybe narrow definition that you can throw an Apple stock into, but that's sort of the logic that I'm having trouble with. Why does it lose its character merely because it's being traded on a secondary market? And the odd thing about the case was the judge, while simultaneously, on one breath saying, oh, the programmatic sales, the blind sales are not unregistered securities offerings. But also on the other side, she says, well, I'm not going to get into whether secondary market sales are securities or not. And that's in footnote 16 in the opinion. So it's convoluted. And this is the nature of this new space. Like, it's very difficult to, I think, track everything. That's why you need lawyers that can really explain this stuff. And I'm not saying the lawyers in this case didn't do a very good job of doing that on either side. But what I am saying is this is an area that people can get it wrong because it's very new and very difficult, and it's hard to apply laws from 1935 to sales in 2020 or in 2012 or whatever. And this is just a perfect example of, I think, where the logic gets a little messy and difficult to follow at times. And that's why, that's the nature of the judicial system. Then we have an appellate process for a reason. Judges don't always get it right. And even the appellate judges, maybe they don't get it right. But it's not unsurprising to me that we're having sort of these difficulties in applying these older laws to this newer product.
Yeah, makes sense. And you mentioned Ethereum earlier, and how perhaps this discussion with Ripple and their, let's say, initial coin offering of issuing these XRP tokens, I'd love to hear your thoughts on Ethereum. You did mention in the thread a little bit that this doesn't clear the path for the Ethereum Foundation. So in the same way that Ripple Labs is the company that released the XRP tokens, the Ethereum Foundation is what had created the ETH tokens. And this is true for many other digital assets and cryptocurrencies as well, not just Ripple and XRP, not just the Ethereum Foundation and ETH, but other assets as well. So you have Tether, you have the Binance token, Cardano, Solana, Polygon. Many of these top digital currencies are seem to be similar, where you have a centralized group that's trying to bring more utility, trying to bring value, just like a company, and issuing these tokens. What implications do you think this specific ruling has on all these other assets? And more broadly speaking, where do you think the trajectory is going to go as we explore what these things are? What's going to happen here?
Yeah, I mean, the implications I think are relatively muted. I saw in sort of the immediate aftermath, everyone was sort of on Twitter saying, "Oh, the XRP has been legally declared by law not a security existing in and of itself. XRP is not a security. It's only when you use XRP or transact in XRP that it may be a security." Some of the lawyers and most of the non-lawyers thought that this was just groundbreaking stuff, and some of the lawyers, including the lawyers for Ripple, thought it was as well. But my take on that is it's very modest in what it means. All it is saying is that standing alone, a token, a crypto token, is not a security, which is perfectly reasonable, unremarkable sort of thing to say, because under the Howie, under the way we have, the SEC has been sort of saying these are securities, is under an investment contract definition. An investment contract has to be, it's a transaction or a scheme. It's not just the there's form contracts sitting around all day in law offices all over the world. They don't become contracts until they're executed. So that's a bilateral sort of promise and a mutual understanding of what you're contracting to. But the contract sitting alone is not a contract, right? It's just a piece of paper with some stuff on it. In the same way, a digital token, after you create a database and create 100 billion of them, that there's nothing remarkable about those not being securities. Not securities just sitting on the database. It's only when you transact with them, only when you start dispersing them to people, giving them to people for labor, giving them to people as an investment, that triggers the securities framework. That triggers the need for registration. So the fact that the judge kind of in dicta, and in dicta what we mean is basically a statement in a court opinion that's not essential to the ruling. So the judge kind of just says offhand, XRP standing alone is not a security. And people just sort of took that out of context and said, this is the big win we've all been waiting for. XRP is not a security. And that basically people were trying to say, well, no token's a security, then Ethereum's not a security. Any other of the 22,000 tokens that they've created are not a security. And it's true, standing alone, none of them are securities. But as soon as you use them, as soon as you transact in them, the scheme becomes apparent. And then you have to look at that scheme kind of as in the totality of the circumstances of how that scheme operates in order to determine whether it's an investment contract under the Securities Act, and thus triggering the SEC scrutiny and all of the reporting and disclosure requirements that go along with a registered securities offering. So, to the extent of what does this holding mean to the broader industry, it's interesting. It's a start of something that could be very interesting, but it's just not applicable to other tokens at all. And then on top of that, something like, and this is what I said in the thread, the Ethereum Foundation, when they did their initial sale, their pre-sale, there was a lockup period. They sold, and this is coming from my book here that was actually really good, The Infinity Machine. It's the one that was written by Camilla Russo. It kind of describes the whole initial startup of Ethereum, and it's very interesting. It's not like a Bitcoin maxi book by any stretch of the imagination, but it does provide a pretty objective sort of view of how the Ethereum network got bootstrapped initially. And one of the things from this book that they talk about was the Ethereum Foundation initial pre-sale. They said, basically, trust us, send us your Bitcoin. Each Bitcoin is going to be worth 200, I think, Ethereum or whatever it was, 2,000 Ethereum. Can't remember what the number was, but we'll give you the Bitcoin. We'll take the Bitcoin. We'll lock up the amount of Ethereum that you bought, and then we'll disperse it later on. as the network is launched. And one of the things that the court found in this case was the institutional investors that they did find were subject to the securities laws. Those institutional investors also had a lockup period, and that gave, in the court's mind, that gave the XRP that was exchanged in that transaction, that gave it imbued it with a bit more of a securities-like quality. And so if I'm the Ethereum Foundation, I'm not super happy about this decision. I mean, I don't think it really puts a nail in the coffin for them or anything like that in terms of a securities finding, but it's not great because that sounds exactly like what the Ethereum Foundation did when it did its pre-sale.
Yeah, and so since there's a similarity there, this lack of a slam dunk win for Ripple is cause of concern for Ethereum then. And so how long do you think this all transpires? Clarity, one way or another, appeals, lack of appeals. I mean, again, we're talking about Ripple, which launched XRP in 2012, right? So we're looking at over 10 years now that this is drug on. Obviously, they weren't sued immediately, but how long is this going to take? Are we looking at months? Are we looking at years? Or are we looking at another decade? How long until the SEC, the government, and the regulatory authorities decide, hey, these things are securities or they're not securities, or hey, they're this? At what stage are we going to have more clarity, if ever?
Right. Well, the wheels of justice grind very slowly in the court system. It's an unfortunate reality of my profession. But from a court perspective, the appeal process is unlikely to materialize anytime soon. Typically, when you appeal, you have to wait for what's called a final judgment, so that the case is essentially over and you have all of your discrete legal issues, packaged up and ready to be appealed all at once to the Court of Appeals. There is an option for what's called an interlocutory appeal, where you actually can appeal mid-case for a specific legal issue, but that requires kind of extenuating circumstances, and I'm not sure that those circumstances are necessarily present in this particular case. So assuming it takes the normal appellate track, you have to wait for trial because this was summary judgment. So this kind of disposes of issues from a legal perspective before trial, and then whatever's left goes on to a full trial, and that takes a lot of time. There's months and months involved in preparation of that. Then the judge does the trial and issues a ruling, and so that could be years away, over a year, maybe even more than a year away before you can even appeal. So yeah, it's going to take some time.
How many hours does it take for an individual to understand Bitcoin? 10, 100, 1,000, more than 1,000? It takes a long time. And perhaps a single individual can never fully understand Bitcoin, but if there was a single resource to help a person better understand Bitcoin in a condensed format, for them, perhaps Bitcoin Evangelism, the book Bitcoin Evangelism, could be a good resource for them. The author is Bryan Jacoutot. He's a friend of mine. I met him recently in Miami in person. We had been friends before that. And he sent me his book. I started reading it, and I'm glad to say that he is sponsoring today's episode. And so to give you a brief word about his book and what makes it unique, is simply that most Bitcoin books are focused on Bitcoin and the merits for Bitcoin, but very few books venture out where other Bitcoin books dare not go and give readers a comprehensive understanding of the crypto market as well. See, Bryan, the author of this book, was a former executive of a crypto project, and now obviously he's Bitcoin only, but he's able to give that perspective for people. And so it could fully flesh out for individuals why Bitcoin stands alone and why there is no second best. And so whether it's for you and trying to strengthen your own arguments against unregistered crypto securities or NFTs or whatever else you intend to not like, or perhaps you want to forward it to other people that you know that perhaps are caught up in that world and help explain to them why Bitcoin alone is unique compared to all these other things and orange pilling them. So whether it's for yourself and strengthening your own arguments, or for it's helping other people understand the merits of a Bitcoin only thesis, Bitcoin Evangelism could be a great read for you and for them. And so in sharpening arguments for Bitcoin and helping you tailor the Bitcoin message to your no coiner friends in terms they can understand, which is very important, it makes a compelling case. Like I said, I've started reading it. It's pretty good. And so if you want to support me, if you want to enjoy a moral and articulate explanation of Bitcoin, Bryan Jacouot's book, Bitcoin Evangelism, could be a good place for you.
I'd like to take a brief moment and talk about the Bitcoin social layer, because today's sponsor of this podcast is the Orange Pill app. And the Orange Pill app is advancing and building that Bitcoin social layer as I speak here. In fact, I'm on the Orange Pill app. I joined it a couple months ago, and there are other Bitcoiners and plebs on there too. people like Safety and Moose, Natalie Brunell, Nate Savenholm, Daniel Prince, BTC Sessions, and other Bitcoiners and plebs are on there too and joining all the time. And so the social layer is really important because while online connections are essential and they're needed and a critical piece of bringing Bitcoin mass adoption, in real life connections are only going to become more and more important into the future and a larger catalyst for being Bitcoin's circular economy and for Bitcoin's adoption. And so with the Orange Pill app, you can find Bitcoiners near you so that you can make those in-person Bitcoin connections and those Bitcoin friends. And one of the cool features is that you don't just find people near you, but also you can find Bitcoiners when you travel somewhere. So like recently, for example, I went to Boston and now I'm going to Miami here soon. And I'm glad to say that I've met Bitcoiners through the Orange Pill app directly and also indirectly through people I met through the Orange Pill app. So it's been something that's been useful to me personally. And so if you're going to be on the road too, you might be able to find Bitcoiners from where you're headed even before you get there. So, and additionally, Orange Pill app not only gives you people to meet, but it's also the world's largest repository for Bitcoin-only events. So you might be able to find cool places to hang out and not just Bitcoiners alone. So we all know that social networks and network effects have value. And so everyone that is joining the Orange Pill app makes it only stronger and stronger into the future. So I would consider joining the Orange Pill app today and get one step closer to mass adoption and expanding your Bitcoin network. So Orange Pill app is available on Android, iOS. For your consideration. Appreciate your time. Let's get back to the show.
Okay, so we have covered a lot of what's happened. We've covered a lot of the debate of is it a security or not and all the legal work around that. But now let's get even more controversial because clearly companies provide value to the world. Companies issue stock, company issue securities. Again, referring back to Apple, Amazon, other companies we're all aware of. Clearly they provide value to the world, and just because their stocks are securities does not mean they don't go up in price and don't have future value. And so I suppose the question there being is, regardless of whether XRP is a security or not, you've studied this for a long time. What is even the value proposition of XRP, or what are they trying to do? What's the utility there that they're actually trying to provide? Whether the token itself is a security or commodity, it seems more likely a security in the long run, but what's the service they're trying to provide? Apple makes computers, Amazon ships books and information and web servicing. What's XRP trying to do?
Well, so, obviously this is an outsider's perspective. And so, take it with a grain of salt. As the XRP army always likes to tell me, I'm a Bitcoiner and a maxi, so they don't need to pay attention to what I have to say. But if you look, even if you look into the sort of statements of Ripple's founders and Ripple's leadership, one of the things, I think the initial maybe proposition was cross-border settlement, right? Like being able to interchange different fiat currencies and send value across borders reasonably quicker than the current system that we have. But that's not a particularly compelling use case as far as I'm concerned in terms of what we kind of need as a society, what we want to get out of this space. Again, these are my opinions, but the Ripple founders, these are mentioned in the court documents, the filings and things. Part of what they did was just say, hey, let's find some utility for this thing. So it wasn't just here's what we're doing. Here's our goal, and we're going to work to get that goal done. It was more like, here's a slate, blank slate. You tell us what you need. You tell us the utility, and maybe we can go about helping. Maybe go about getting that done. And so there wasn't a great deal of initial utility for XRP when the network just launched beyond sort of the same thing that Bitcoin provides. However, they provide it in a centralized manner and with obviously like key players that Bitcoin doesn't have, and it takes away. I mean, one of Bitcoin's great value propositions is nobody controls it. Anybody can redesign the current system with add a distributed network, and that seems to me to be what XRP is doing. And they claim to be able, I guess, to get some efficiencies out of that. But are those efficiencies worth sort of, number one, speculating on it and determining and hoping it goes up in monetary, dollar value. But number two is like, why do we need that if the system can do that already? And instead of having, political control people who control things from a political perspective. You have corporate controllers, and so I don't see a huge use case again from my perspective for that. I don't think it certainly doesn't outcompete Bitcoin on that. And the fact that this case is in itself so watched and so consequential to the ongoing viability of the network. I mean, I think that displays a serious sort of potential problem for the network. If it can be taken down by the SEC, then how robust is it really? How anti-fragile is it? And I would submit that Bitcoin just hands it head and shoulders above everybody on that front. It is, in my opinion, the most anti-fragile crypto asset, whatever you want to call it, digital asset. So I don't know what its value prop is, and I would challenge people who say, oh, it's this and that. Okay, well, I haven't seen a whole lot of value come out of it. I haven't seen a lot of projects come out of it, and again, the leadership team themselves were searching for utility, and that was part of the problem. That was part of why the initial offering was so problematic, because to the extent they made the utility argument in the court case, even though the court kind of rejected it. But to the extent they were making it, they were saying, one of the detractors of that line of argument was, well, you didn't actually have any utility. It was just selling and, hoping for this network to get bigger and better and, more diverse and things like that. But, that's the problem with a lot of the currencies. I think a lot of the cryptocurrencies is hey, here's my leadership team. We've got a fancy idea. I market it to you very well. It's very complicated, so don't worry. Trust us. We'll get it done. But we'll find the utility along the way. And I think in large part the utility argument was a response to the potential securities violation. So again, that was the legal argument made by lawyers, stemming from even as far back as Ethereum and Ripple, saying, well, this can't be a security because it has utility. And I'm not sure that has been established yet. And even to the extent that it is established, I don't know if it removes it from that sort of categorization anyway.
Yeah, definitely. I do not have a legal background, so a very different perspective and road for me getting here, but I largely have a very similar view. I think it's pretty clear what happened is that Ripple issued this token, and just like you said, when this threat of legal action came up, they had to find some sort of utility or exclusive utility so that they could frame it as a commodity, avoid this litigation, avoid these fines, and avoid this trouble. And that seems to be what they've chosen, is that will be a cross-border settlement. We're faster, better, cheaper, all that, whatever. And I'm there with you. I don't really see the point of that, because the SEC can come after it. I mean, what is going to enable permissionless, borderless transactions around the world if it takes SEC, and most people aren't even aware of this case. Like it's not like a big deal comparing to Bitcoin, where the Chinese Communist Party has tried to ban it, where it's been banned in many other countries, where the Taliban's tried to stop it, or Vladimir Putin's tried to stop it, and even Ripple too. That's something else that a lot of people don't know, is that Ripple, the company that issued these XRP, actually has had a massive negative media campaign against Bitcoin for years. With Greenpeace and other organizations online, they've been very vocal in being anti-Bitcoin and against Bitcoin. And their primary argument is that Bitcoin uses too much energy. And I think their reasoning for that becomes obvious when you realize, oh, well, they're trying to do, quote unquote, exactly what Bitcoin's doing. Well, of course, they want to hate on Bitcoin. And of course, what's the main difference? Well, Bitcoin's decentralized, and they can't focus on that because that reveals their own flaw of being centralized. So you go for the cheap shot. You say, oh, Bitcoin uses more energy, and therefore it's inferior. And we're innovating because we're the cheaper one. And my problem personally, and perhaps you have that you probably agree with this, but perhaps you have a different perspective on this. My problem is that right now we have all this rampant speculation in the XRP price. So of course it's well over doubled here, I believe, just in the year to date with this release. Obviously, people can see the massive spike here, middle of July 2023. My problem is that is barely over the last, over the last 18 months or so, we're barely at those levels. So the selling pressure, the dumping pressure, and the negative, the token dumps from Ripple, as well as people just giving up on it, even with this massive quote unquote win, a technical win, perhaps not a long-term win. Even with that, we're barely covering just over a year of losses. And if we go out even further, it's not a lot has happened in the last 10 years or so. When comparing to Bitcoin, things are very different. And more importantly than showing the Bitcoin price in terms of US dollars, which is right now 30,200, perhaps the better chart to look at here, I'm sure you've seen this too, is XRP in terms of Bitcoin. So the exchange rate or the value of XRP in comparison to Bitcoin. We can see way over here to the left that XRP was much more valuable in comparison to Bitcoin. And since then, it's continued to bleed out slowly and steadily over many years here. It's not bled out as much recently because, again, it's skyrocketed in price, but that's just this tiny little blip here. We've gone from, basically like a, whatever it is, a 99% to a 98% loss. It's doubled, but it's still at a massive loss here. And this is initially what I tweeted about, and then someone sent me your thread. Was about how ultimately it was not, in my opinion, it was not a very good day, because this is like the best piece of news for this company and these legal actions for years. And XRP in terms of Bitcoin has barely recovered, and it's heartbreaking to read about all the people that have waited years, essentially speculating on this litigation to come through, and it's not been satisfactory to them. And then likewise, there are lots of people that still perhaps have a different opinion, let's say, and everyone's entitled to their own opinion, but that's just mine, that it seems that these things are trying to do things they inherently can't. I don't think a centralized company inherently can create permissionless money. And it's funny that despite the negative media campaigns against Bitcoin using more energy, people are preferring the more expensive and the more energy intensive currency. And so it's fascinating.
Yeah. So there's a couple of things that you touched on there I wouldn't mind talking about too.
Go for it.
So one of the things is the result of this the result of this opinion, maybe temporary, maybe more long term, but the immediate result is, exchanges started listing XRP again. I think Coinbase lists it now. I think Kraken lists it now. I think Binance lists it now. And so it's been sort of, despite being a well-known, I think, cryptocurrency within the actual community itself, obviously not outside of crypto land, but within the cryptocurrency community and Bitcoin community, everybody knows about XRP. So, but it had to linger kind of in the shadows for a while, not on these major exchanges, probably difficult to purchase and find. But it's also been difficult to sell in a reasonably, expeditious way. So when exchanges list it, you get some more buyers potentially, but everybody who knows about XRP, or everybody already knows about it in the space, right? So they've probably made the decision about whether they want to purchase it or not. And then I think the buyers that you're getting now are people who have purchased it, and they're just purchasing maybe more than they had, and they're saying, okay, now this is a better bet. I really don't know if you're going to convince people who have been in the space for a while, who understand the differences between some of these tokens and the similarities between a lot of these tokens. I don't think you're going to get a whole lot of new buyers that way, but it also creates a huge window to sell the asset itself. So people are now able to dump really easily back onto XRP buyers and things like that. So maybe like you saw a quick spike, but then you also saw a dump too. And then if you look at that chart again, it spiked up to like 70 or 8 or maybe even 80, I don't know. But then you can see it starts to go back down again because people can sell it now reasonably well. And there's a ongoing kind of like joke that I have that like when Coinbase lists a new asset, it's just terrible for that asset because it has a huge pump and then it just dumps for the rest of the time. And it being listed on Coinbase is a dangerous game for these illiquid assets because they can be cratered really quickly. So it's not all good news that it's being listed on exchanges because the market is able to make a call that it has previously not been able to. Has been sort of relegated to a discrete group of people who are diehard XRP people. So that's one interesting thing. The other interesting thing too is like if you go on a proof of stake style currency, because the big thing I think it's Garlinghouse or Larson, with their cleanup Bitcoin, change the code nonsense. First of all, I just find that campaign to be really disingenuous. So number one, they're taking the money. People gave them retail gave them 787 billion. I know the court documents show that Garlinghouse and Larson have each dumped like between 300 million and like 550 million dollars of XRP onto either institutional investors or retail. So they've made some serious coin. Did I say billion again? Yeah.
Yeah,
It's
million.
million.
Yes. Little bit
Yeah,
bigger.
I gotta get that. I'm
Yeah.
just preparing for the incoming inflation.
Yes, we're preparing for future numbers. But yeah, the point
Yes.
still stands. They have hundreds of millions of dollars, close to $1 billion, that's been dumped and raised in negative media campaigns. So sorry, I just wanted to correct that because I know we'll get lots of
Yes,
in
thank
the
you.
comments that'll shame you for that.
Yeah, my fault on that. Apologies, XRP folks. They've dumped hundreds of millions of dollars on XRP, and they allocate 5 million for this cleanup Bitcoin, change the code thing, and sort of the narrative that they're putting out is, oh, this is a simple switch. All you got is these Bitcoiners are crazy. They want to pollute the environment. It's so easy to change it. Look what Ethereum did. Why doesn't Bitcoin just change the code? And they know better. They either don't. If they don't know better than that, then that's a huge detractor on them for being in the space for long. So I think they're being very disingenuous when they sit there and tell the market and kind of people who are unfamiliar with the space that this is a simple fix, or that anything is even required to fix it, because changing Bitcoin to proof of stake would be a fundamental product change. It would change the asset forever, and it would lose all of its compelling attributes about decentralization and censorship resistance and all those things. If you're a company like Ripple, who is, I guess, advocating for proof of stake, think about how proof of stake is basically, I have the most of a coin, so I get to make the most decisions. My decisions are the most important because I pooled it and I have acquired all this amount. But how do you square that line of consensus mechanism with a pre-mine? Because it's fundamentally unfair that you can do a pre-mine and sell to a privileged group of people a huge allocation, and then say, oh, by the way, this is decentralized, but it's also only updated based on who holds the most. So it just doesn't make a great deal of sense from a fairness perspective. And then to attempt to kind of graft that onto Bitcoin under this disingenuous label of, oh, you're harming the environment, this is a quick fix, you guys are just being stubborn, I think it's one of the things that bothers me the most, I think, as someone who's a Bitcoiner. And I think it gets under my skin a little, because they're trying to use this sort of concern trolling tactic and virtue signaling, and they're attempting to undermine the actual asset. So it is a little bothersome to hear it coming from folks who do a pre-mine and then say, just go switch to proof of stake. And it's just that the circumstances surrounding it are very troubling for me. And then, of course, the final thing is, the energy output. They ignore or diminish the fact that, yes, Bitcoin uses energy, but anything that's worth anything requires energy to secure. And if it doesn't, it's really not inherently that valuable, and it can be altered or changed in a way that destroys any value that it does have. But also Bitcoin, encourages green mining and things like that. And I don't like to get boxed into that argument, because I feel like it's already putting me on my back feet, and I don't feel that we're in a situation that many folks are saying we are in terms of the danger regarding climate. But even assuming that's correct, the act of mining Bitcoin, being able to sort of set up shop wherever you are, wherever the energy is, it's a free market way to, I guess, achieve that more renewable, quote unquote, energy without having to do subsidies and government subsidies, without having to prop up failing energy sectors. It's a way to take Bitcoin as energy indiscriminate, in that it will just go for good energy, cheap energy, wherever it is. And so if you can get green energy and find a way to make it profitable, then Bitcoin's going to help you, especially if you just post up next to a river that nobody uses, but you want to build out a green energy center there, and maybe near a town that otherwise wouldn't be able to justify that renewable build out. Suddenly Bitcoin makes it make sense, because it's there to absorb energy demand and to create profit when energy is otherwise not being used. So I think it really ties in nicely in the energy argument, and for the XRP or Ripple founders to try and change it and get it out of that market under the guise of it being some sort of energy, green energy killer, is again disingenuous, and it just it's a little frustrating at times to deal with it.
Yeah, I can tell you're passionate about it. Love it. One way to think about it, I guess, is here's the irony. Is that, and I'm sure you know this as a lawyer, is that, like, okay, so I'm in my house right now, and if someone's going to invade it and I want to defend it, like I could use a gun or some sort of weapon to defend it, or shield or whatever, or I could have a lawyer give him a contract, a piece of paper, and it's like saying, well, it's more energy efficient to prevent a burglary with one of your contracts, one of Bryan's contracts, instead of your own home defense system. And to me, it's ironic because it's like, okay, sure, it takes less energy to print a piece of paper than to manufacture a gun, even whether you use it or not is irrelevant. But the irony is it's actually more wasteful, because you print the piece of paper, you don't solve the problem, versus you make something that uses more energy, but it solves the problem. And that just goes right to what it said. And the irony is that a lot of the people that are in the XRP, crypto, whatever space, have this belief that it's so much different from what it is now, when I would argue that really it's like the same. You know, like you were just saying a minute ago with proof of stake, for those that don't know, is that as Bryan said, you have the more share of the total network, and you have a larger influence on the network. That's essentially what Federal Reserve System is today. That's essentially what fiat currencies are today. That people in control of the ledger can create more tokens, more units, more political currency units, more whatever you want to call them, and dump them onto the market. And so we've seen that with the US dollar, for example. If we want to price that in terms of Bitcoin, we have a similar kind of instance there. And then you were talking earlier about the Coinbase effect, how when a token goes out on the market, the price begins to collapse. And it's the same reason here, that as soon as the market becomes free, as soon as everyone has the ability to exchange a token, it just collapses. Internet Computer was another infamous example.
Oh yeah, love that one.
Yeah, a crypto token from, let's see, this was May 2021, so near the last bubble, and you can see it just completely collapsed. It's completely dead, and it's because there's no utility there. The utility was, oh, we do things cheaper, faster, better, but again, there's no point. Or the FTX. This is perhaps the most infamous one. I get asked all the time by people about FTX. And it's the same instance that a few scammers were saying, hey, this thing has value, it's utility, and they were basically seeking liquidity to prop it up, until suddenly here in late 2022, it just completely collapsed and got gutted. And so that's, for me, and for you as well, that's the hope with Bitcoin. That's a promise of it, is that it is decentralized, and it is not a security. It is not something that people can just create more of. When we can create more XRP, we can create more Apple stock, we can create more political tokens. And so I'd love to hear your thoughts on this. But when I think of stocks, it's like the same thing. Stocks are essentially proof of stake, but the difference with stocks is that they're regulated, and that they have legal framework that's keeping the supply from becoming infinite. And so that's why people right now prefer saving in stocks versus cash, because nobody's stopping the US government from making more American political dollars. But we can stop Apple, and ironically what's stopping it is the US government. And so my question to you is, as a lawyer, how do you think of it that way? Because this gets in the whole Lowry thesis and everything else, where you have physical power and abstract power, and how you deal in the abstract world of human society. I mean, do you have any reflections on that, or thoughts about that, about how the only kind of scarcity we have today with real estate and stocks, let's say, is basically just regulatory frameworks of artificially capping new supply?
Yeah, I mean, so there is regulatory frameworks that do that. Obviously, you can issue more stock and dilute the shareholders, and I guess the pushback absent a regulatory framework from that would come from the market itself, which would dump your stock and send you to zero, being like, okay, well, the leadership team has now lost it, and we can't invest in that stock anymore because they're going to dilute us. And so there are, like, non-regulatory market mechanisms that push back against the the idea of no scarcity and absolute unscarcity, I guess you could call it, of stocks. But as you mentioned, Bitcoin, you cannot do that. And even if you attempted to do that, it wouldn't be Bitcoin. It would be a fork of Bitcoin. And maybe the market would gravitate towards that more, but it would be a fundamentally different asset. And there is no regulatory mechanism that is required to even incentivize not doing it, because the asset itself and the game theory involved in it incentivizes it. And that's what makes it really again, there's a few aspects of it that make it really truly monumental discovery or invention, however you want to frame it. And that's one of them. And to see the, I guess, I don't want to call them copycats, but the 2.0s, everything was always Bitcoin 2.0, or 3.0, and this is Bitcoin but better, faster, easier. To see them just sort of dovetail back into the traditional thing that we are all always subject to under the current setup of our economy. Just basically like, hey, let's create more stocks, and hopefully it'll fund a project that's people find useful. That's IPO, that's venture capital, that's stocks. There's nothing groundbreaking there. And I've said this before, that Bitcoin was a technical solution to a technical problem. How do you prevent double spending in the absence of a central issue or a third party? And then how do you maintain digital scarcity? Bitcoin solved those technical problems. Proof of stake and other crypto assets are technical solutions to largely political or legal problems. And so that's why these fights are so important to these assets, because they're not solving a technical question. Anybody can make these things that are occurring on a blockchain, right? Like these apps, dApps, they're all like, everything I see is, everybody can make monkey JPEGs and things like that. There's no technical barrier to that, but there is a political barrier and a legal barrier, to offering something for exchange of value in order to bootstrap your network or your company or whatever. That's SEC regs. That's all the statutory provisions dealing with banking and exchanges and things like that. So those are political and legal problems. And what crypto assets generally, besides Bitcoin, do are attempt to solve via the technical sophistication those political and legal problems, rather than present some sort of technical solution to a technical problem. Because I think Bitcoin proof of work, and the reason why people say digital scarcity was a one-time phenomenon, is because Bitcoin solved that technical problem through a technical solution. That's what makes it really remarkable, and that's one of the things that separates it big time from all the other assets in the space.
Yeah, I think that's the crux of the argument. I think that's the crux of the debate. And the funny thing is that outside of our tiny little niche of Bitcoin crypto, weird libertarian, anarchist, whatever, our central internet bubble, is that people are completely clueless that this is like the foundational debate. It has been for years, but that's the basic debate: is, was Bitcoin an invention, or was it a discovery, or was it both? And I think the vast majority of people in the space would argue that Bitcoin was an invention, and the implication being, if it was an invention, there could be better inventions. We made the Model T, but then we make better and better cars that are cheaper, faster, better. Versus, was it a discovery, like say the wheel, fire, electricity, written word, whatever, that basically once it's discovered, like, it's not really going to change. And that's exactly what you touched on, Bryan, about how, in your perspective, and likewise mine, is that the idea of digital scarcity being a discovery makes sense. If you can invent it, and you can invent it better, well, then it's not really digitally scarce, because you've just duplicated it, and it's better. And so anyway, that's the main crux of the argument there. That's the main difference. And ultimately, what I find fascinating is that the majority of people don't really understand that's the question. Even within the space, people outside of it are clueless that debate exists, but people in it don't even understand it. That tweet I showed earlier of mine has almost 600 comments, when normally would have gotten like 100 or 150 or so. So I literally have like 300 or 400 people commenting that I'm insane for trying to judge XRP's long-term future on one day of price action or whatever. And it's funny, because it's like they don't even understand that's the debate, that's the argument. They're like, oh, we're all in this together, Luke. Why are you such a hater? Why are you so anti-XRP? It's like, I'm not anti-XRP. It just doesn't solve the problem. And
right.
Yeah, so it's funny how emotional people are. And I don't know about for you, but for me, I've really realized the last week or two, in the light of this, is that, to me, the people that are all in XRP is going to 500x or whatever, to me that seems ludicrous. But people really believe that, and I think a lot of them perhaps have a high incentive to believe that, or are influenced to believe that. But there are people that genuinely believe that. And I say Bitcoin's going $100 million. Bitcoin's going to more than 500x. And people think I'm crazy. And so I guess with that said, it seems the same on the surface, but when you dive deep, to me, there's a difference there. And my question to you is, in this difference that we're talking about here, what do you think the potential value for Bitcoin is, for potential value for that system that actually is different, that actually is the exception to the rule of humans can be controlled, so go manipulate it? What's the value of that? What is the value of Bitcoin as a network to the globe, do you think?
Oh boy, we're that's a tough one. Putting numbers on these things, I'm always really hesitant to do that, because understanding how money works in general is, the value that I place on it today will necessarily be reflected, even if the ultimate value is the same, will necessarily be reflected differently, because the underlying monetary medium, the US dollar, is constantly degrading in value. And so that's why we always think it's so funny that, old grandpa bought his house for $35,000 and now it's worth $500,000 and he hasn't done anything. There's been no new things around him. It's just grown in value. And the reality is that's not the case for the most part. It's just the money has lost value. So I'm always very hesitant, because I think that these things on a longer time frame than probably your average trader, like an XRP. I do think a lot of XRP folks are more traders than maybe true believers that this is going to be the standard or whatever. Perhaps I'm wrong on that. I don't know. But these are long. I look at these at a very long time frame, and I can say I can't really put a number on it. But what I can do is say, if it is the solution to this grand problem of sound money with a digital economy, and I think that it is, the upside, so to speak, is relatively unlimited, because we've never had anything like that. We've never had. We constantly keep having to value things in a currency that's always changing, and constantly having to measure the length of something with a ruler that's never the same size. And the world is worse off, I think, for that. There are compelling arguments for, I've read the Keynesian arguments. I understand the inflation-based system and how it potentially promotes people using their money as opposed to hoarding it. I don't agree with it, but I think I understand it pretty well. But we've never tried this before. We've never had this. So we're standing at a threshold in time where we have this digital economy that is being, currently exploited by the proof of stake of fiat money, right? The people who are next to the money spigot, next to the faucet, that get all of the first distributions of fiat whenever there's an inflationary moment in time. And everyone senses that the world is unfair, and everyone ascribes a different reason to why the world is unfair. But I think if you asked everybody of all sides of the political spectrum right now, it wouldn't matter what political side they're on. It only would matter is whether they're elite or the non-elite, right? And the elite people would call it first totally fair, and the non-elite would say there's something wrong, and we don't know what it is. And I think that's what Bitcoin is what is wrong. Without the lack of Bitcoin, the lack of a robust sound money digital network in order to engage in economic transactions the world over, there's utterly limitless value potential in that. We can't even imagine how much upside there is, because there are things that are going to be possible as a result of it that we can't imagine right now. So I can't put a number on it, but if it works, it's a game changer. And if it doesn't work, it's one of the great experiments of economics, and we got to do it in real time and live through it, and it's an exciting time nonetheless. And you can't say we didn't try.
Yeah, to me that's just where my conviction goes overboard, because it's like, even if it turns out we're wrong, you and me and everyone else that's a believer in this, it's like, it's the right thing to do. I believe millions of lives are prematurely cut off every single year from inefficiency, let's say, and I think working towards that vision, I think, is the good thing and the right thing to do. And I suppose bringing it back to XRP, then, to me, it's fascinating how large relatively XRP is into Bitcoin. So Bitcoin has a market capitalization of just under $600 billion, 587 billion. You can see that right here for those looking at my screen here, if I can highlight it. Anyway, so roughly $600 billion, $30,000 per coin is where Bitcoin is. And XRP is 40 billion. So it's like 1/15th. So Bitcoin, this potential singular discovery of digital scarcity for the past, present, and future, is only worth 15 times more in market cap terms than XRP, a pre-mined, centralized distortion that's been crushed with very minimal regulation, and they have billions and billions of tokens ready to dump on the market and completely collapse it. And somehow the free market is either radically long XRP or radically short Bitcoin, and actually probably both, I think. I mean, to me, it makes sense. Yeah. So do you think, what do you think happens with the XRP trading? Do you think it could double or triple again? I think it easily could go up to 80 billion, 100 billion market cap.
One thing I've learned about this space is anything can happen for a period of time. So yeah, I would definitely say that's perfectly reasonable to suspect that it might triple or even more. I don't think people are looking at it the right way, but again, if you're a trader and you just want to 5x and get back into dollars, that's not what I'm into, but it's totally possible. I get it. I've never been that person. That's just, it's not my cup of tea. But that's definitely possible. I mean, I look at Luna Classic. There are still people trading that token. Like, that was a demonstrable utter failure, and people are still buying and selling it. So yeah, people will buy and sell and do crazy stuff all the time in order to make a quick buck, and or to be positioned, at least they think, early and front run a bull run. Because again, when this market goes parabolic, as it tends to do every so often, people just get in and they don't think about it. They don't know anything. They're just, they're retail, and they're just like, I want to make some money. And so people will always position themselves ahead of that. So yeah, I totally think that could happen. And it's a shame that people keep doing this. It reminds me of, if you ever read the book When Money Dies, it was like a 1970s book exploring the Weimar Republic, hyperinflation. And people just bet on the stock market, irrespective of what they were betting on. They didn't know what they were purchasing, but they're like, oh, I can't be in this money because it's hyperinflating to the moon in a bad way. And so they just put money into stock market. And people are going to do that. People are doing that here too with crypto market and the stock market to a similar degree, regardless of what they're purchasing, because they're just like, whatever, it could go up, and I can't keep it in dollars. So it's again, a strange time. It's an incredibly interesting time to be alive, but we've got a lot of things that are happening that sort of strike at the heart of what's like of the economy, like what's happening. And the crypto market and the ability for something like Luna to continue to attract investors somehow, and speculators is very indicative of a shaky monetary system. And things like XRP, things like Luna, things like
Meme stocks,
internet computer.
Yeah, all meme stocks, or I know people that are trying to trade watches. I know people that are trying to, everyone's trying to flip things to make a quick buck because everything keeps going up. And really what we're trying to do is we're just trying to have like a basic savings account. Yeah.
And then that's when you get a sound money that can be kind of infinitely divisible and distributed throughout the world, suddenly you'll have smart people making smart investment decisions, because it will no longer be viable or profitable to speculate to the degree that it is now. And I think you'll find you'll get a lot less malinvestment. I think you'll find you'll have maybe fewer companies, but better companies that actually deserve their valuations, because someone's able to actually value them objectively, rather than through this lens of, oh, am I keeping up with inflation? And not everybody asks that question, so definitively, but in the back of their head, again, they know something's wrong. They know their prices are going up. They know housing prices going up, and they're like, I gotta get involved. I gotta stay in the game because my wages aren't enough right now. It's not working. So I think when Bitcoin is fully adopted, if it's fully adopted, you'll start to see that sort of diminish, and you'll get better investment and a better working economy.
Yeah. Very interesting, Bryan. Thank you for your time. I really appreciate it. And I suppose as a closing thought for people as they leave, whether they've entered this conversation pro XRP or anti or whatever, my hope is that people realize that the majority of these tokens, so these 22,000 crypto tokens, the vast majority are
today.
Yeah, and that's actually a question I got from someone. I got the question, Luke, I'm interested in Bitcoin, but I don't understand why there needs to be 22,000 Bitcoins. And my hope is for people taking away this conversation is not just XRP specific, but to consider the larger problem of all these centralized things. They aren't viable over the long term, whether it's from a company or a tiny little crypto thing or a government. We need some way to transact value over time that's outside the control of humans. And so the irony there is that Bitcoin is very likely that solution. And the vast majority, if not all, of everything else in the digital asset crypto space or whatever is actually that exact same problem. It's just people pretending like they're making a better Bitcoin. Really, they're just recreating the problem from the start. So people can do what they want. They can buy and hold what they want. They can trade what they want. But long term, Bryan, both you and I think that all these things are trending to zero against the immutable ledger of Bitcoin. So anyway, Bryan, thank you for the time. Where can people find you?
You can find me on Twitter, Bryan Jacoutot. It's my name, and that's where I do most of my talking. So I'll be there.